Good morning, everyone. Good afternoon or good evening. So I'm pleased to welcome you all to the Forum on Financing for Development Forum at the 2022 session of the Economic and Social Council, and I call to order its first meeting. The Forum will hold its meetings through in-person formal meetings and in a hybrid format with both virtual and in-person participation. I kindly ask participants to be mindful of the additional difficulties experienced by interpreters when working remotely and to deliver statements at a normal speaking speed. And I apologize in advance for any technical difficulties that we may encounter during the meeting. I will now deliver very brief remarks. Excellency Dr. Mokgweetsi Eric Masisi, President of the Republic of Botswana, Excellency Mr. Abdullah Shahid, President of the General Assembly, Madam Deputy Secretary General of the United Nations, Ms. Amina Mohammed, Ms. Nesrine El Saim, Chair, Secretary General's Youth Advisory Group on Climate Change, Excellencies, distinguished participants, ladies and gentlemen. It is a great pleasure for me to welcome you all to the 2022 Economic and Social Council ECOSOC Forum on Financing for Development follow-up. At the outset, I wish to underscore the critical importance of financing for development for the full realization of the 2030 Agenda for Sustainable Development and its 17 Sustainable Development Goals, the SDGs. The high-level participation at this forum demonstrates your strong commitment to the 2030 Agenda and to financing sustainable development. As we meet here today, the ambition of sustainable development for all is facing perhaps its greatest threat since the adoption of the 2030 Agenda 7 years ago. The COVID-19 pandemic has exacerbated trends that are contributing to cataclysmic effects on development progress, and the poorest and most vulnerable are experiencing the impacts most severely. Millions of people around the world have been pushed deeper into extreme poverty. Inequality is rising, and the gap between developed and developing countries is growing. These trends have unfolded as we continue to see the impacts of carbon emissions on global climate and a geopolitical crisis that is driving refugee flows, causing severe disruptions on global supply chains for essential commodities and also contributing to food insecurity in parts of the world. The macroeconomic trends affecting least developed and low-income countries have been particularly acute. While developed countries have been able to borrow at low cost to fund pandemic recovery efforts, developing countries face a huge barrier in the cost of debt servicing, limiting their ability to invest in critical drivers of development, including infrastructure, housing, and social services. The situation is dire. Over half of LDCs and other low-income countries are now in or at risk of debt distress, while many developing countries are experiencing slow economic recovery, in which estimates indicate that 1 in 5 of these countries will remain below the pre-pandemic levels by the end of 2023. To compound these challenges, the same group of countries continue to face hurdles in access to vaccines, as well as therapeutics and diagnostics that are critical for bringing a decisive end to the pandemic. In light of these complex challenges, international cooperation, global solidarity, and multilateralism remain the surest way to solve these global challenges. It is only through urgent and coordinated action that we can mobilize the resources that will turn the trajectory around, lift people out of extreme poverty, prevent the worst effects of climate change, and achieve the Sustainable Development Goals. Excellencies, ladies and gentlemen, the Financing for Development Forum, with its universal participation, is the global platform we need to advance action on these challenges. It is a forum that unites us and one that has a track record of delivering consensus. An ambitious outcome that demonstrates the solidarity of member states in these trying times is critical. In this regard, I highly commend all member states for reaching consensus on the FFD outcome document last Friday. I would like to seize this opportunity to particularly express my sincere gratitude to the co-facilitators, their excellencies, Mr. Keisha Maguire and Jorunda Valtisen, ambassadors and permanent representatives of Grenada and Iceland to the United Nations, respectively, for ably steering the negotiation process to consensus. I also thank all the member states and other stakeholders for their dedication, constructive engagement, and commitment, which are indispensable to the adoption of an ambitious, action-oriented, and forward-looking outcome to effectively respond to today's challenges. I look forward to a successful and productive forum, and I thank you for your kind attention. It is now my honor to invite the forum to hear additional opening remarks by His Excellency Dr. Mokgweetsi Eric Kiabetswe Masisi, President of the Republic of Botswana.
Your Excellencies, Ambassador Colin Vixen Kelapile, President of ECOSOC, Ambassador Abdullah Shahid, President of the General Assembly, Mr. Antonio Guterres, Secretary General of the United Nations, Ms. Nasreem Islam, elected Chair, Secretary General, Youth Advisor Group on Climate Change, distinguished ladies and gentlemen, good morning to you all. I'm delighted for having been invited to be part of this opening session of the 2022 ECOSOC meeting on financing for development follow-up. It has been slightly over 2 years now since the storm of COVID-19 reached our shores. This occasion, therefore, is an opportune moment to collectively strategize on how to revive the global economy. I wish to take this opportunity to thank the President of ECOSOC for convening this important session. I also wish to applaud the United Nations Secretary General for the exemplary leadership under the auspices of the United Nations system with a view to providing a coordinated response to save lives, protect livelihoods, and facilitate recovery from the pandemic. It is also noteworthy to recognize the efforts of the President of the United Nations General Assembly for galvanizing the collaborative spirit and solidarity of the entire membership of the United Nations in responding to the COVID-19 crisis. I also wish to pay tribute to the President of the United Nations Economic and Social Council and the permanent representative of the Republic of Botswana to the United Nations for ensuring heightened stewardship of the business of the Council and its follow-up mechanisms during this difficult phase of the pandemic. The prevailing uncertain global economic outlook will have a negative bearing on many developing countries and their trajectories, and could mortally cripple their plans to achieve the 2030 agenda and its target. In this regard, we cannot afford insufficient response to this crisis, especially that the pandemic has significantly eroded the efforts of the global community, including progress and gains previously made in the implementation of the SDGs during the last 2 years. This forum, therefore, comes at a crucial juncture of our time to renew our commitment and resolve to build back better together. In pursuit of the ECOSOC chosen theme for the 2022 session, namely Building Back Better from the COVID-19 pandemic, while advancing the full implementation of the 2030 Agenda for Sustainable Development, a clear mandate has been carved of how to redirect our efforts and resources. The full implementation of the 2030 Agenda depends primarily on financing, which is currently a challenge faced by many member states. The pandemic has drained the coffers and financial buffers long set aside thus relegating many countries to unprecedented debt and expenditure. Further concerning are the conflicts that are continuously smoldering across the globe, as well as the unforgiving wrath of climate change in the form of catastrophic disasters. All these have further incapacitated most economies and diminished their ability to provide the range of services to the detriment of the welfare of their citizens. However, the COVID-19 pandemic has reminded us of the need for sustainable generation of fiscal space to build resilience and deliver on development priorities. Without progressive fiscal systems, governments will face challenges in tackling poverty, inequality, providing quality education, healthcare, as well as achieving sustainable economic growth while taking into account environmental factors and the limitations and carrying capacity of our planet, all of which are embedded in the 2030 Agenda and its underlying SDGs. Therefore, it behoves all countries to foster the necessary breakthroughs in unlocking financing for development. This includes the fulfillment of previous international commitments, enhancing domestic revenue mobilization, and establishing good governance institutions and systems necessary for the effective utilization of such financial resources, with a view to addressing the fiscal pressures experienced by the countries. We need to ensure full adherence to the guiding principles of the Addis Ababa Action Agenda, AAA, which establishes a firm foundation to support the implementation of the 2030 Agenda. My country is committed to the implementation of this framework. With the support of the UN system, Botswana is currently developing an SDG financing strategy through an integrated national financing framework. The primary objective of the strategy is to undertake much-needed reforms on tapping into domestic and international public and private SDG financing. The focus is to also diversify the economy and increase the government's revenue-generating capacity to support the realization of the SDGs at national and subnational levels. It is therefore fitting that following the identification of a number of priorities, both at domestic and international levels, our evaluation becomes necessary in order to compel policy alignment and action at all levels. Most importantly, it is also warranted that the existing financial programs should be reassessed in order to reassert and to inject the requisite momentum to spur economic development, particularly in times of turmoil, as it happened during this pandemic. Statistical data has indicated that since the early days of the pandemic, the global economy has shrunk to unprecedented lows in living memory. More than 120 million people globally have been driven into extreme poverty, with approximately 270 on the cusp of facing acute food shortages. In Africa alone, many states have not been able to mount any robust fiscal policies to combat regressing economies or any pivotal health sector policies because of pending debts and increased interest rates and service fees. It is against this background that we should all find progressive solutions here today on how to remedy the situation. For instance, to avoid debt distress, governments should borrow conservatively to have sufficient financial resources to effectively spend on SDG implementation and productive investment. I also call upon global financiers to consider reducing borrowing costs to ease debt burdens. A key part of our discussion today should be the Addis Ababa Action Agenda and its guiding principles. There should be much emphasis on the following action areas. 1, debt and debt sustainability. 2, addressing systemic issues and international development cooperation. The Financing for Sustainable Development Office, the Interagency Task Force on Financing for Development, or any other relevant stakeholders at the forefront of this initiative would help guide us on the way forward and briefly apprise this gathering of the progress already made. It goes without saying that the Bretton Woods Institutes play a pivotal role in the global economy, and I am grateful that their presence here today will give them first-hand appreciation of the views shared as well as recommendations. As we head into the ECOSOC high-level political forum in about 2 months, and with countries preparing their voluntary national reviews, I implore all stakeholders to give renewed emphasis to the issue of financing for development. I invite your concerted efforts to devise solutions on how we can bridge financing between the developing and developed countries, with much emphasis on reducing heightened borrowing costs. Above all, development initiatives should be premised on sustainability, particularly environmental sustainability. Ladies and gentlemen, in conclusion, I'm very much optimistic that this gathering will help us propagate sustainable solutions to financing for development. The 2030 Agenda should remain in focus at all times, and the 17 Sustainable Development Goals should always be our guiding principles, especially when we draw or revise our national development policies. Once again, our collaboration as part of the United Nations family can enable us to realize effective financing for development. The COVID-19 pandemic is still a challenge. We should all work together to eradicate it completely. I call upon all people of the world to assist the United Nations in its fight against this pandemic, as well as global conflicts and disasters. I thank you.
I thank the President of the Republic of Botswana for his statement. I will now invite the President of the 76th session of the General Assembly, His Excellency Abdullah Shahid, to address the forum. Your Excellency, you have the floor.
His Excellency Ambassador Colin Vixen Kelapile, President of ECOSOC, His Excellency Dr. Mukawetsi Masisi, President of Botswana, Her Excellency Amina Mohammed, Deputy Secretary General of the United Nations, Excellencies, distinguished delegates, ladies and gentlemen. I'm delighted to join you today for the 2022 ECOSOC Forum on Financing for Development. We meet at a time when the COVID-19 pandemic has dramatically altered the development trajectory for many countries, especially developing countries, upending lives and livelihoods. The impacts have been uneven at best, tragic at worst, deepening political cleavages, social inequalities, and macroeconomic fragilities. This is particularly the case for countries in special situations, especially the least developed countries, landlocked developing countries, and small island developing states, as well as for some middle-income countries. Many of these countries risk losing an entire generation's worth of hard-won development gains. Aware of these challenges, as President of the General Assembly, I reconstituted the Board of Advisors on Least Developed Countries, Landlocked Developing Countries, and Small Island Developing States, the LLS. I rely upon them for their advice, particularly around entry points and pathways to unlock the potential of countries in special situations and to increase their resilience in the face of compounding crisis. On the topic of sustainable financing, several suggestions emerged. First, countries in special situations face increasing vulnerabilities at systematic level, especially in accessing finance. Short-term response measures to address inflation, vaccine inequity, and gender equality gaps must be complemented by long-term strategies that account for multidimensional vulnerabilities. International support must include increased investments, trade facilitation, and reallocation of special drawing rights to LLS countries, amongst others. As you would be aware, I have convened a high-level panel on experts to finalize a multidimensional vulnerability index for small island developing states. The work of the panel is ongoing. Its outcome will be an important contribution to addressing the vulnerabilities these countries face at a systematic level, as well as to help unlock the potential of countries in special situations. Second, shrinking physical space and debt burdens are major bottlenecks for development of LLS countries. Debt sustainability, restructuring, and transparency must therefore be prioritized. This will be part of the discussion at the thematic debate on debt the President of ECOSOC and I are convening at the end of May. This will be an opportunity for the international community to have a focused and inclusive discussion on how to ensure more systematic SDG-aligned debt relief, address gaps in the international debt architecture, and prevent future debt crises. Third, the full implementation of commitments agreed to in multilateral frameworks, such as the 2030 Agenda for Sustainable Development, the Addis Ababa Action Agenda on Financing for Development, the Paris Agreement, and COVAX is urgently needed. We know what is required. We have discussed and negotiated these frameworks. Now we must mobilize the political will to implement them. We need to also pay particular attention to the context-specific needs and actions identified in the programs of action for LDCs, LLDCs, and SIDS, and policy options that have been identified for middle-income countries. Excellencies, the countries in special situations must be placed at the center of the recovery efforts of the international system. The plight of vulnerable middle-income countries must also be fully considered. The 2030 Agenda will be won or lost in these countries. More resources and investments should be allocated to these countries for risk reduction and resilience building in the face of rising poverty, climate change, natural disasters, debt vulnerabilities, and food insecurity, particularly worrisome in the light of the crisis in Ukraine. It is my hope that the outcome of this year's forum will enable countries to be better positioned to achieve the SDGs and increase their resiliency. Excellencies, the COVID-19 pandemic placed economies under stress while also exacerbating existing challenges. Even before the pandemic, financing for development, especially international public financing, was short. Access to long-term financing, including international public finance, lending by development banks, and commercial financing will enable countries to respond better to crisis and recovery more sustainably. We need to build capacities, build stronger institutions, and support better governance to ensure that financing for development is sustainable and stimulates growth. This forum's deliberations will be an important moment to give direction to the international community in this regard. For many, developing and developed countries alike, the tourism sector is a major driver of economic growth and development, providing livelihoods for hundreds of millions of people and allowing many more to benefit from diverse cultures and natural environment. Recovery efforts present an opportunity to invest in sustainable tourism strategies that are SDG aligned and resilient against future pandemics and shocks. In recognition of this, next week I will convene a high-level thematic debate on how tourism can advance recovery for people, planet, and prosperity. I look forward to your active engagement at the event. Excellencies, ladies and gentlemen, important initiatives have been undertaken to focus the international community's attention on the need to ensure financing for development in the era of COVID-19. But much more needs to be done. One thing is clear. The international community must strengthen efforts to show up support for countries, especially countries in special situations, to prevent a vastly unequal global recovery. Excellencies, I look forward to this forum's contribution to advancing financing for sustainable development and helping to create a better future for all. I thank you.
I thank the President of the General Assembly for his statement. I now invite the Deputy Secretary General of the United Nations, Her Excellency Amina Mohammed, to address the forum. Madam Deputy Secretary General.
Thank you. Mr. Chair, President of ECOSOC, President of the General Assembly, His Excellency Abdullah Shahid, Nisreen As-Siam, our UN Secretary General's Youth Advisory Chair, Excellencies, ladies and gentlemen, it is indeed a pleasure to join you today at the ECOSOC Financing for Development Forum and to deliver this message on behalf of the Secretary General, who sends his warmest greetings to you all. The global economy is under severe stress. Many developing countries are reeling from the crippling effects of an uneven recovery from COVID-19 pandemic and the ticking time bomb of the climate crises. Vaccine inequities continue. The war in Ukraine is now sending shockwaves through global food, energy, and financial markets. Many economies are on the brink of a downward spiral of insolvency, cuts in critical investments, economic contraction, and rising unemployment. Decades of development progress are being eroded. The World Bank predicts that 250 million people could be pushed into extreme poverty this year, up to 323 million people could face acute food security, and the essential transition to clean and sustainable energy is at enormous risk. There are early signs of a tsunami of potential debt crises, deprivation, discontent, and civil unrest. No country, developed or developing, will be isolated from these impacts. The SDGs are in need of an urgent rescue. Financing for development is an essential part of the solution. But so far, the global response has fallen far short. That is why the Secretary-General has established the Global Crisis Response Group on Food, Energy and Finance to ensure high-level political leadership and get ahead of the perfect storm of food security, energy and financing challenges and implement in a coordinated and coherent global response. Excellencies, the Global Crisis Response Group's first report, together with the 2022 Financing for Sustainable Development report issued last week, set out recommendations for immediate action. First, mobilizing finance quickly and flexibly from all sources. The international community must fulfill its official development assistance commitments and support rapid access to long-term sustainable finance. International finance institutions must prioritize flexibility and speed. Emergency financing mechanisms that can disperse funds rapidly and without the unnecessary conditions must be put to service immediately. Access limits to the IMF's rapid credit facility and rapid financing instruments must also be increased and the cumulative limit extended. Countries with strong external positions should channel their unused special drawing rights, the SDRs, to others in need, including through the IMF's Poverty Reduction and Growth Trust and the newly established Resilience and Sustainability Trust, the RST. New rounds of capital injections are needed for multilateral development banks, including at the regional costs faced by developing countries in the international markets and the role of the credit rating agencies. The Secretary-General has been calling for reform of the international financial architecture for some time. This system is failing to deliver for those who need it most. Excellencies, second, we need to address rising debt risks. The G20 should reactivate the debt service suspension initiative for 2 years and reschedule maturity for 2 to 5 years. The common framework for debt treatments is in dire need of reform to include transparency of timelines and clarity on what debt should be covered. It should include a debt service payment standstill, enforcement of comparability of treatment, and inclusion of private and non-Paris club creditors. Eligibility should expand to cover all countries that need help. New mechanisms to increase fiscal space, such as debt swaps, should also be explored. These measures will safeguard critical expenditure and free resources for immediate investment in the Sustainable Development Goals. Over the medium term, efforts should be made to establish a more comprehensive sovereign debt restructuring mechanism designed to deal with the long-standing problem of holdout creditors. Third, we need to invest in equitable access to COVID-19 vaccines and treatments, as many countries are still mired in an unpredictable pandemic. We need full funding of the COVID-19 Tools Act Accelerator and its COVAX facility. Countries must step up and share technical expertise and intellectual property to end this pandemic and strengthen resilience for the future. All countries must continue to provide and expand social protection and invest in a job-rich recovery. Finally, we must urgently step up climate finance, half of which must go to adaptation. This also requires aligning national budgets and tax systems with the SDGs and the Paris Agreement, addressing greenwashing and rethinking incentives in the international finance system. We need global solidarity supported by strong political will, ambition and leadership. Developed countries should urgently fulfill their commitment to mobilize $100 billion annually for climate action in developing countries. Excellencies, the international finance system has deep pockets. We have the capacity to make sure all countries can get through this crisis with their development prospects intact. It is precisely multilateral forums such as the ECOSOC Forum on Financing for Development that must provide strong momentum for action. The Secretary-General and I urge you to be ambitious and muster the leadership and political will to resolve the substantial financing challenges we face, salvage hard-won development gains, and rescue the Sustainable Development Goals. We are, ladies and gentlemen, running out of time. I thank you.
I thank the Deputy Secretary-General for her statement. I will now invite Ms. Nesrin El-Saim, Chair of the Secretary-General's Youth Advisory Group on Climate Change, to make a statement.
Good morning, good evening, good afternoon, according to the place you are watching me from. Your Excellency, the President of the ECOSOC, Excellency, President of the General Assembly, Deputy Secretary General, ladies and gentlemen, Excellency, President of Botswana, with all of you with your titles preserved. I am here today speaking to you with a huge burden of representing all of the young people who have high hopes and aspirations, but more also the young people who have no space, no hope but the SDGs right now. It's less than half of the time frame that we put to ourselves in the UN, but also as young advocates for the SDGs to achieve the sustainable development. Yet, young people feel that we are falling behind, far behind, not only in achieving SDGs, but in reducing the inequalities that the unequal development in this world caused. Unfortunately, a lot of young people started losing hope in the process of the sustainable development or the development itself, in all of which is. Now we are in a very urgent time of restoring this trust by showing actions, not only promises and speeches, to the young population of the world, that everything will be fine, and the promise that we put to ourselves to reach this equity position in development is happening and progressing in very fast as we are wishing for. COVID-19 was a huge shock to humanity, but it wasn't the first, and it did not start everything we are facing now, not everything we are suffering from right now. It only increased the inequality that existed far, far, far ago. Building back better is very important, but the most important is how to address situations like the pandemic, which might occur in the future. Other pandemics, not only the health-wise, but in humanity, like the situation we are having in Ukraine right now. The world is, I think, expressing the most crucial time in the humanity, where we all should show not only solidarity, but action-oriented plans, action-oriented strategies, and action-oriented finance to address these gaps and these problems. As a young person, and unlike the Secretary General and Deputy Secretary General, we don't urge you to do something right now because we are running out of time. We are working with you. We actually demand you all to take steps, very wide, very big, and very fast steps to recover, to actually reach the situation we are hoping for a better future. We need to give hope back to young people. We need to show them in actions that the world we are dreaming of is happening. As a Sudanese, I was very happy to hear the speeches about the debt relief, the IMF processes, but I also understand that good governance and democratic situations in countries like our country is a huge threat to these processes. I also urge all of you not to wait anything anymore for impressing the democracy, the good governance structures in many countries to fight corruptions. So when the finance for development finds its right track, it goes to the right pockets and it goes to the right ways and the right expenditures for the actual development of the countries. We are surrounded by many challenges, but we are also surrounded by many intelligent young people. So I urge you now to include young people in all of your planning, all of your country's strategic development, because we have a lot of innovative ideas. We can actually make the future that we are dreaming of together. Thank you very much for giving me the floor. Thank you very much also for working to the better future that we are hoping for. And I again demand, not only urge all of you to take actions right now, because it's time for actions and it's now or never. Thank you very much.
I thank the chair of the Secretary General's Youth Advisory Group on Climate Change for her statement. At this juncture, I would like to briefly pause our meeting to allow the President of the General Assembly and the Deputy Secretary General to take their leave for other commitments. On behalf of the forum, I would like to thank them for being with us this morning. Thank you very much.
Thank you very much.
I will now invite the forum to turn to item 1 of its provisional agenda, entitled Adoption of the Agenda and Other Organizational Matters, issued as document E/FFDF/2022/1. Are there any comments on the provisional agenda? May I take it that the forum wishes to adopt its provisional agenda as contained in document E/FFDF/2022/1? I hear no objection. It is so decided. We shall now turn to the rules of procedure and modalities for the meetings of this forum. I would like to remind delegations that in the intergovernmentally agreed conclusions and recommendations of the 2021 forum, it was decided that the modalities of this year's forum would be those modalities applied to the 2019 forum. In that regard, I would like to recall that at the forum held in 2021 and at previous forums, it has been agreed that the rules of procedure of the functional commissions of the Economic and Social Council, as well as the relevant provisions of General Assembly Resolutions 69/313, 70/192, and 71/217, and relevant decisions of the Council would be applied to the meetings of the forum. Furthermore, in the event of any contradiction between the rules of procedure and the relevant provisions of the Assembly resolutions and Council decisions, the latter will take precedence. May I take it that the forum agrees to apply the arrangement that I just mentioned to the meetings of the 2022 forum? I hear no objection. It is so decided. We have now concluded the first formal meeting of the forum, the first informal meeting in a hybrid format with the option of both in-person and virtual participation will begin immediately following the adjournment of this formal meeting. Please remain seated. The formal meeting is now adjourned.
Excellencies, distinguished delegates, ladies and gentlemen, I call to order the first informal meeting of the 2022 session of the Economic and Social Council Forum on Financing for Development follow-up. This meeting is being held with both in-person participation as well as virtual participation on the remote simultaneous interpretation platform. I now invite the Forum to hold a panel discussion on financing the SDGs by increasing fiscal space for an inclusive and sustainable recovery. We shall first hear keynote addresses for this discussion. I have the honor to invite the Forum to hear a statement by His Excellency Joko Widodo, President of the Republic of Indonesia.
The COVID-19 pandemic has posed severe challenges for low-income countries and small island countries. 38 low-income countries has reached high-risk status for external debt burden. 150 million of world population were pushed back into extreme poverty, and more than 161 million people in the world fell back into hunger. Efforts to address SDGs funding gaps that initially required $2.5 trillion may increase by up to 70% due to COVID-19. The war in Ukraine has worsened world economic situation. Global economic growth forecast this year has also dropped to 3.2% from 4.1%. However, fiscal capacity of developing countries to finance SDGs programs and growth is still very limited. Therefore, it must be expanded to prevent the global gap from becoming even wider. Huge steps are required to address these huge challenges. First, strengthening global solidarity is very necessary. The G20 has allocated $45 billion in special drawing rights for the most vulnerable countries. These efforts will be continued by the G20 presidency of Indonesia. Multilateral funding institutions also have an important role to expand debt relief schemes and concessional financing. Second, new sources of growth must be enhanced. Digitalization is key, as well as the empowerment of MSMEs, women, and youth. Digital transitions must have strong development dimension to increase the level playing field for developing countries and MSMEs. Access of developing countries to global value chain must be increased for a more resilient supply chain. Indonesia's G20 presidency will also advance international tax reform to give more development dimension. Third, innovative sources of funding must be promoted. Blended finance has great potential to fill SDGs funding gap. Between 2005 to 2019, $131 billion of blended financing were mobilized, with total funding deals increased by 1,124%, from 41 in 2005 to 502 in 2019. Indonesia is committed to promoting SDGs funding through blended financing, including through the SDGs Indonesia 1 scheme, Green Sukuk, and other instruments. Fourth, transparency and accountability in fiscal management. Prudent, accountable, and forward-looking budget management must be promoted. Excellencies, inclusive growth is key to achieving SDGs. A global sustainable future can only be achieved if we can all move forward together. Recover together, recover stronger. Thank you.
I thank the President of the Republic of Indonesia for his statement. I now have the honor to invite His Excellency Pedro Sanchez, President of the Government of Spain, to deliver a keynote statement.
Vivimos una crisis sin precedentes.
This is an unprecedented crisis due to the unjustified illegal war between Ukraine and Russia. And we see the repercussions and economic recovery with even greater repercussions on those most vulnerable who have already suffered from the pandemic. If we've learned anything from COVID, is that we need a strong and inclusive, consistent, multilateral system with the United Nations at the center in order to recover as quickly as possible and work towards the SDGs and 2030 agenda. With these well-learned lessons, Spain is working towards 0.7% of its GDP to be allocated for financing for development as an absolutely necessary for development. The question we must ask is how can we increase the fiscal margin of the most vulnerable countries? First, we need to facilitate access for these countries to financing, reducing their costs, implementing adequate mechanisms to reduce debt, and to that end, my country, Spain, is fully committed to voluntarily channeling 20% of SDRs towards the fund setup. Secondly, we need to intensify efforts to increase the progress toward guaranteeing the goals of the SDGs. We need to work with private and public accreditors, especially the bilateral ones. And we need to go on a case-by-case basis, including for middle-income countries and vulnerable countries. And we need to quickly go back to the capital markets and restructure them. Third, we need to guarantee greater cooperation with qualification in terms of assessing risk and ensure them that their analysis won't ensure that they will not unfairly penalize those countries that are alleviating debt. Those are some issues that we can improve, and yet with these measures, without a sound fiscal basis, countries will not be able to sustain financing of their development. And for that, we support their efforts to create more effective, progressive, and equitable fiscal systems. We believe that the debt and the Ukrainian war has all the more highlighted the importance of continuing in this direction, working towards the Addis Ababa Plan of Action. Only in this way can we achieve a more peaceful, sustainable, and fair world. Thank you.
I thank the President of the Government of Spain for his statement. It is now my pleasure to welcome the distinguished panelists, Her Excellency Liia Tadesse, Minister of Health of Ethiopia, Her Excellency Matilda Ehrenkrantz, Minister for International Development Cooperation of Sweden, His Excellency Bounlewa Sinchay-Voravong, Deputy Minister of Finance of the Lao People's Democratic Republic, Ms. Marietta Jager, Deputy Director General for International Partnerships at the European Commission, and Mr. Bo Lee, Deputy Managing Director at the International Monetary Fund. I am also pleased to welcome the lead discussant, Ms. Bhumika Muchala of the Third World Network, as well as the moderator, Mr. Achim Steiner, Administrator of the United Nations Development Programme. I look forward to an interesting discussion, and I now give the floor to Mr. Steiner to moderate the panel.
Thank you so much, Vice President, Excellencies, ladies and gentlemen. Given that time is a little bit of a constraint, I will abbreviate my opening remarks to just a couple of observations, because I think we have already heard from our opening panel this morning that the situation in the context of COVID-19 in the last 2.5 years, when we look at financing in general and financing of the SDGs and of recovery and the challenge of fiscal space, had already reached very serious challenges for many countries. Indeed, the Deputy Secretary General spoke to the Secretary General's decision to establish a global crisis response group, and some of the figures that were presented just a few days ago by the Secretary General and my colleague Rebecca Greenspan, I think, were a stark reminder of quite how serious the outlook is when we look forward to the next 6 months. Minister, you and I, we were together with many others last week in Washington. Our international financial architecture is struggling to act in advance, struggling to act on a scale, and struggling to act with speed in terms of being able to address what are at the moment still worsening outlooks for the global economy, but particularly dramatic outlooks for least developed countries, vulnerable countries, and those that have already exhausted virtually all of their fiscal space in trying to cope with COVID-19. So when we meet here in April of 2022, one of the key questions that we will touch on this morning in the session is, what is it that we can do now, not in the future, but now, first of all, to try and not only anticipate, but respond to what is quite clearly a series of very worrying indicators ahead of us? Secondly, what is it that we can learn from the pandemic response also, where countries have done extraordinary things that perhaps before the pandemic were unthinkable in terms of magnitude, in terms of the pace with which we responded, the ability of governments to identify those most at risk and being able to not leave them behind in the pandemic response. But also the harsh lesson that we're still living with, that technology and science having given us a reminder of what a brilliant age we live in, and then a very significant failure in terms of access to vaccines. So the spectrum of lessons learned is broad, but particularly as we meet here in April, it is quite clear that for many countries, member states of this United Nations, the next 6 months could take them literally to the point where debt distress becomes a financially existential challenge. Are we able to respond to this? What kind of mechanisms are needed? How does the world step up in terms of actually having a capacity to respond? Because, as the Secretary General put it a few days ago, right now the world does have enough food to feed itself. Right now the world has enough fuel to sustain the global economy. Right now the world has plenty of finance to in fact respond. But as markets are reflecting every day, as governments are experiencing, as people who are essentially confronted with being priced out of their daily food by virtue of what's happening with grain markets, we also know that our systems are simply not responding adequately, quickly enough, and with sufficient focus. That is the backdrop for the panel that we have assembled here today. And as you put it just now, Vice President, an exceptional group of people speaking from the front lines of their national but also international engagement. And I would like to begin by inviting Ms. Marietta Jager, the Deputy Director General for International Partnerships at the European Commission. Marietta, you have the floor. Thank you.
Thank you very much, Vice President, dear Akim, Excellencies, ladies and gentlemen. I'm very pleased to address the Financing for Development Forum today on behalf of my Commissioner, who unfortunately can't be with us. Today, the world is facing a number of crises, as you all said it before, from the COVID pandemic to war in Ukraine, and this is having a drastic consequences on all sources of financing towards a sustainable development. And we just heard from the spring meetings, this is having really a drastic consequences on this, all sources of financing towards sustainable development, and global economic outlook is really uncertain. But we are gathering here today because we are conscious of all these challenges and we are determined to get back on track. And what is my first message is we need to work together. You put in front of us 3 guiding questions, and I will try to reply to all of them on behalf of the Commission. You ask about the lessons learned from COVID. After 2 years into pandemics, the EU and its member states have shared over the 464 million doses of vaccines so far to the low and to the middle income countries. And we are set to secure 700 million doses for sharing by mid-2022. What remains crucial whatsoever is to ensure that the speedy delivery of the shared doses. At the COVAX summit on 8th of April, the EU committed to provide additional 75 million to COVAX. And I would like to say that in total, Team Europe has already committed over 1 billion of vaccination support, and it is a lead contributor with a close to 5 billion in cash and loans to the COVAX facility. And in parallel, the EU support to the local manufacturing of vaccines to strengthen our partner countries' long-term resilience. And we believe that this is the right way to go. We have mobilized more than 800 million so far. Now, when it comes to the second question, I'm very proud to announce today the publication of the EU Investing in Sustainable Development report that provides a clear picture on how the EU and member states have contributed to the financing for development. And what I would really like to say that to increase fiscal space and liquidity, the EU has led international debt relief efforts for the most vulnerable countries. And the Addis Tax Initiative Declaration that was signed last year was an important milestone to advance the domestic revenue mobilization, and this confirms our commitment to our collect, move more, spend better approach. I would also like to emphasize that the EU is the largest donor in the grant budget support in the world, and as Team Europe, we support sustainable finance in low and middle income countries. We are setting up the high-level expert group to advise the European Commission, and I would like kindly to invite you all to participate. But we believe that the private sector is also crucial, and to attract foreign investments and increase fiscal space through taxation, a dynamic local private sector is also very much vital. And that's why we have our initiative like a global gateway, European Sustainable Fund for Development, and also business young initiatives to contribute to all of that. Your last question is about how can we do it better? And I would like to say that we have all obligations to work together in a very coordinated manner. We are very much committed to enhance policy coordination. At the EU level, our renewed European financial architecture for development aims to use EU resources more efficiently and leverage private financing with our coordinated actions. We need global solidarity, and I would like to conclude that I hope that you will join me in this message of hope today if we all work together to boost and align all funding and policies with the Sustainable Development Goals. I truly believe that we can succeed together. Thank you very much.
Thank you so much, dear Marietta Jager. We appreciate also very much keeping to time. So our panelists have been invited to take a 5-minute window, following which we will obviously turn to you as member states also. And let me therefore move straight to Dr. Lia Tades, the Minister of Health of the Federal Democratic Republic of Ethiopia. Minister, you have the floor.
Thank you very much, Chair. Distinguished participants, excellencies, the COVID-19 pandemic is in its 3rd year, and its direct and indirect effects have continued globally. It has posed a profound threat to the ability of developing countries like ours to achieve UHC and the SDGs. And most countries' economic growth has been heavily affected, resulting in a contracted fiscal space. And the pandemic has also affected the amount of funds countries get, which has put health under financial strains despite the increasing health financing needs. The last 3 years have been very challenging for the people of Ethiopia, with the effect of pandemic continuing while we are dealing with the pandemic and the country facing fiscal challenge to address impacts of conflict, drought, locust invasion, flood, and others. This has led to loss of lives, livelihoods, destruction of infrastructure, and large number of internally displaced people. One of the promising public health interventions to ending the pandemic is availing equitable access to safe and effective vaccines timely. In Ethiopia, more than 29.4 million doses have been administered and 21 million people have received full vaccination. Though this is a remarkable progress, it is far from the target of vaccinating 70% of the population by mid-2022. If this inequity trend continues, it will have a lasting and profound impact on socioeconomic development and recovery in low and middle-income countries, and greatly hamper the global efforts on controlling the pandemic. Enhancing global coordination and cooperation is key to ensuring access to vaccines for all, especially to the most vulnerable groups, through supporting countries' efforts in supplies, distribution, vaccine deployment, and health system strengthening, including vaccine manufacturing. I believe the other lesson from the pandemic and other shocks is that given the potential for an increase in shocks, the international community needs to work together with governments to prepare countries for increased volatility in fiscal policy and space, so countries adapt to rapidly changing conditions. We know developed countries have attained recovery through allocation of massive resources, which is not feasible in countries like mine. The pandemic and other social, environmental, and economic challenges of the past 2 years have caused reduced economic activity, leading to dwindling tax collection and narrow fiscal space. While on the other hand, the health sector is faced with increased expenditure to mitigate the direct and indirect effects of the pandemic. And I believe there is an urgent need for massive financial development assistance that meet the ODA target from international community, with a need to commit additional resources with long-term and ultra-low interest rates, as many countries are now facing prohibitively high borrowing costs. All financial flows from both national and international communities must also be aligned with national priorities and the SDG goals. On the other hand, to improve aid efficiency, the 5 principles of the Paris Declaration, which include country ownership, alignment, managing for results, and mutual accountability, should be given additional emphasis. We also need a more comprehensive regional financing operational arrangement with the support of partners, funding to increase emergency liquidity for developing countries. Therefore, it is important to enhance the role of regional platforms like the Africa CDC and their resource envelopes. We should strengthen countries' capacity in technology and innovation, and particularly in local manufacturing. And countries also need to create an enabling environment for international and domestic investors to strengthen public-private partnership in priority sectors. And before I finish, I would like to say the international community also needs to find sustainable solution for debt distress for low-income countries like Ethiopia, with support to access long-term sustainable finance and implement different debt relief instruments. And in this regard, as a country, we have requested debt treatments under the common framework as part of our homegrown economic reform. Finally, global and national policymakers and international financial organizations should improve policy coordination and coherence as agreed in this action agenda to ensure global financial stability and access to sustainable financing to achieve the SDGs. I thank you.
Thank you very much, Minister Tades. Thank you for your remarks and also the illustrations with Ethiopia's very real context in which you are managing these. It is now my pleasure to turn directly to Ms. Mathilde Ernkrans, the Minister for International Development Cooperation of Sweden. Minister, you have the floor.
Thank you very much. Excellencies, ladies and gentlemen, I am pleased to participate in this important panel to share my thoughts on how to increase fiscal space to finance the sustainable development goals and for the recovery of COVID-19 pandemic. Many challenges such as poverty, inequality and increasing debt levels in low-income countries have been exacerbated by the pandemic and now risk being worsened by the mounting geopolitical insecurity caused by the Russian invasion of Ukraine. As other speakers already pinpointed, the pandemic has highlighted many weaknesses in our society. It has also reminded us of the importance of a whole of society perspective to protect people's health and well-being. Flexible core support is key for an efficient multilateral response to new threats, including pandemics. Sweden's flexible funding to several international organizations has helped them to quickly adapt and address COVID-19 and its consequences. Our large contributions to global vaccine access through the innovative finance mechanism, International Financial Facility for Immunization, were made with sustainability in mind, allowing COVAX to front-load funding which we provide over a 10-year period. I am hopeful that we can improve the international system for fighting pandemics and health threats and protect and promote health, but when doing so, we must use a broad approach in line with SDG 3 rather than creating new vertical mechanisms. With record debt induced by the pandemic, a time of tightening financial conditions pose grave risk to countries with high levels of debt and weak economies. Domestic revenue mobilization is a key component for sustainable development financing. Taxation and tax system with the right design and implementation can generate resources for investment in social security, tackle inequalities, strengthen gender equality, environment protection, and the general resilience of a nation. Therefore, Sweden is a proud member of the Addis Tax Initiative. Corruption is a major threat to the building of functioning tax system and trust in societies. Corruption is a key negative factor and risk in the global ability to achieve the 2030 Agenda. The continuation and strengthening of anti-corruption efforts is therefore essential for reaching the Sustainable Development Goals. A key dimension in our effort to building back better is the development of a private sector that contributes to sustainable society by creating decent jobs and paying taxes. Despite efforts to increase the mobilization of private capital, levels of private investment are still insufficient. New innovative partnerships and models are clearly needed. In this regard, Sweden welcomes the support of the UNDP initiative, Integrated National Financing Framework, that helps countries strengthen planning and processes and overcome existing impediments to financing sustainable development. Sweden also sees great potential in an increased use of guarantees to support the recovery from the pandemic and accelerate the green transition. The guarantee loan instrument managed by SIDA has proven be successful in helping small and medium enterprises, micro-businesses and smallholder farmers, among others, to get access to finance. Issues related to women's economic empowerment are central to the achievement of the 2030 Agenda. We have seen women being more affected by the COVID-19 pandemic. Women also generally earn less and have less secure employment. Sweden will continue to develop and deepen our feminist foreign policy. Part of that will be focused on women's economic empowerment. The premises for international development cooperation have become more important than ever. In accordance with rapidly changing world, the working methods of development cooperation must be continuously developed and adapted. In the work of strengthening human rights, democracy and the rule of law, long-term commitment, flexibility and creativity are needed. Sweden will continue the work of building and deepening both broad networks and collaborations for better collaboration and sustainable results. And to finish off, Sweden stands by the commitment to earmark 1% of GNI to international development cooperation. We must all strive to meet our commonly agreed ambition to provide at least 0.7% of gross national income in ODA. Thank you.
Minister Ernkrans, thank you very much for, first of all, being with us here, but also for sharing Sweden's latest outlook on the topics at hand today. And I thank you very much for your contribution. Let me now turn to Mr. Bunlwea Sinchai-Voravong, who is the Deputy Minister of Finance of the Lao People's Democratic Republic. Deputy Minister, you have the floor. Thank you.
Thank you, Mr. Chairman. Excellency, ladies and gentlemen, it's my great and pleasure to participate in this extremely important forum. As you know, that Lao PDR was among the earliest countries to localize the SDG to National Socio-Economic Development Plan and establish the National Committee to monitor the implementation. our president appointed the prime minister as the chair of the committee. Now we face a huge challenge for achieve this SDG in 2030. We turn on to the economic impact of the COVID-19. After the outbreak of the COVID-19 in early 2020, our country confronted with the severe contraction economic activity, particularly in the service sector. In addition, during that time, the government also undertook many tax relief measures to help the businesses. Therefore, it led to sharp decrease in the domestic revenue. On average, in 2020 and 2021, the domestic revenue fell by 3% of GDP. Because of our fiscal position has limited fiscal space and buffer. Therefore, the government has no choice just to cut the expenditures as possible to avoid the high budget deficit and maintain our fiscal consolidation. The cut on the expenditure in the last 2 years has significantly impacted on the implementation of the SDG program, on the public debt. Because of the deterioration of the macroeconomic situation, our country has confronted with more difficulty in public debt management because of the difficulty to access to the financial market to raise the funds to finance the repayment of the debt. And the interest rate of borrowing also increased. The interest expenditure as a percentage of our domestic revenue increased from about 7-8% to more than 15% in 2021. This expenditure increase on the expenditure had dried out the development expenditure. Now in 2022, as we now facing more unexpected challenges, such as high oil price, high inflation, high food price, with uncertainty we further affect our economic growth and domestic revenue mobilization, put more pressure on the fiscal position of our country. For the future plan, our government has struck this. To minimize the risk in this uncertainty situation, our government has approved the economic recovery plan, make it as a national agenda. The first priority is to achieve the sustainable growth by economic restructuring towards the expansion of economic base in the service sector, logistics sector, cross-border service, trade, export promotion, better management of energy sector, and reopen the mining sector to mobilize more resources to finance the development. The second priority is to improve the revenue administration by digitalize tax administration, reform on tax administration to widen the tax base, reduce the tax avoidance and the tax evasion, constructing the medium-term revenue framework to build the credible medium-term policy. And the third priority is to on the expenditure side. The government has improved the budget planning to secure the budget for the SDG priority, improving spending efficiency and the quality of the public procurement. Enhancing public debt management is essential. Rising public debt management, we revise the public debt management law, carefully calibrate the financing mix, develop domestic debt market, negotiate with the debtor to restructure our debt contract. My recommendation for the international community. First, international community has to increase cooperation on the tax administration, to share on the tax information, capacity building on the tax administration, tax on the multinational corporation, tax on the digital asset, and build an international system to ensure that the global corporation pay a fair tax to the poor country. The second, international community and international financial institution has to work more to find the flexible debt release and ODA to support poor country to overcome the development challenges in the period of the COVID-19 pandemic and the global economic difficulties. The third, we have to work together to reopen our economy, to support economic growth, and to recover our tourist sector to the pre-COVID-19 level. Finally, I would like to thank all the development partner and country international financial institution had always supported my country in the last 2 years and these difficult times. And look forward to having your continued support as we can recover together. ขอบใจหลายๆ Thank you.
Thank you so much, Minister Sinchevaravong, and thank you also for being here with us this morning. It is now my pleasure to call on our colleague, Mr. Bo Lee, the Deputy Managing Director of the International Monetary Fund. Bo, are you online?
Yes.
Please, you have the floor.
Thank you, Mr. Chairman. Excellencies, ladies and gentlemen, I'm honored to join you today to discuss a critical topic, achieving the 2030 Sustainable Development Goals. My key message is this: low-income developing countries already face major challenges to achieving the SDGs. But now, because of the COVID-19 pandemic, coupled with economic shockwaves from the war in Ukraine, developing countries face an even steeper climb. Their fiscal space is tighter than ever. They urgently need help. Even before COVID-19, the IMF estimated that while emerging market economies could finance their additional spending needs to achieve the SDGs through domestic actions, most developing countries needed much more financing externally. The key areas such as health, education, and the priority infrastructure, developing countries required additional spending every year, equivalent to about 15% of their combined GDP in 2030. The pandemic has now made these challenges much worse. Both emerging economies and low-income developing countries are facing higher financing needs, limited domestic resources, and higher debt levels. Our research examined 4 countries in our sample and found that these countries may need additional annual spending of over 14% of GDP on average to reach the SDGs by 2030. It is 2.5 percentage points higher than the pre-pandemic estimates. Even if low-income countries implement ambitious domestic reforms that are hugely beneficial for development, they still would only be able to fill at most half of the financing gap. So what can and should be done to help low-income countries achieve the SDGs under these exceptionally challenging circumstances? First, domestic reforms. This includes boosting economic growth through structural reforms, improving the efficiency of spending and mobilizing more revenue, and attracting more private financing by improving the business environment and strengthening institutions. Second, support from the donor community. Donor financing pre-pandemic has been about half the UN target for official development assistance, or ODA. Increasing ODA to that target, which is 0.7% of gross national income, would allow most low-income countries to achieve the SDGs by 2030 or soon after. The stakes are high. Without additional external financing, the SDGs could be delayed by a decade or more on average. Third, continued support from the IMF and the multilateral development banks. For the IMF, this includes providing diagnostic and policy advice, targeted lending, and capacity development. Let me conclude by saying that we now face huge obstacles to achieving the SDGs by 2030. But our research makes clear we can still achieve them if we step up. We can take smart domestic actions. We can mobilize international support. We can achieve the better world that the SDGs envision, and we must. Thank you.
Thank you to Mr. Boli, the Deputy Managing Director of the International Monetary Fund. And before I turn to our next speaker, let me just alert you once Ms. Muchala has spoken, we will open the floor. Those in the Trusteeship Council here are familiar with using the system, pressing the speaker button to request the floor. To those who are virtual participants, please use the online speaker form to request the floor. The link to the form is available in the chat boards of the platform. It is now my pleasure to invite Ms. Bhumika Muchala, representing the Third World Network, to take the floor. Ms. Muchala, you have the floor.
And colleagues, I'm speaking on behalf of Third World Network, the Financing for Development Civil Society Group, as well as the Women's Working Group on Financing for Development. Excellencies, addressing systemic asymmetries within the international financial and economic architecture is the very foundation of financing for development since its inception in Monterey. And indeed, a systemic approach has never before been more urgent for global governance as it is today. A convergence of crises from pandemic, war, economic downturn, food insecurity, climate change, and gender inequality engulfs our interdependent world and seriously threatens the SDGs. As fiscal policy space for development keeps shrinking and debt crises, food and fuel price inflation, and higher costs of financing in an uncertain global economy keeps accelerating, the principles of distributive justice and equity for developing countries across the South in relation to historical and structural drivers of inequality among nations is more important than ever for the world's most vulnerable. Throughout the pandemic, liquidity provision and fiscal space for most developing countries has been severely shortcoming, despite the fact that the lion's share of the 650 billion issuance of special drawing rights went to countries that needed it the very least due to inequitable IMF quota allocations. SDRs was still by far the most effective international community response for pandemic recovery in developing countries. At least 99 low and middle income countries have reportedly used 104 billion SDRs for urgently needed health and economic recovery needs, such as vaccine purchases, health, and social protection. More systematic consideration of SDRs is required, both as an instrument for responding to global crises as well as to address asymmetries in monetary and fiscal support tools between developed and developing countries. Civil society urges that rich countries fulfill their pledge to rechannel their unused SDRs in alignment with principles such as avoiding the creation of new debt, policy conditionality, additionality to aid commitments, and a more equitable allocation formula so that SDRs go to countries that need them most. Civil society also calls for a new allocation of 2.5 trillion SDRs, as is warranted by the continuation of the pandemic, as well as economic shocks caused by the war in Ukraine. The FFD Forum is well placed to further develop proposals already made by UN and IMF staff, as well as member states, for the broader use of SDRs in both development and climate finance. Furthermore, food and fuel price inflation threatens a fragile pandemic recovery, adding to the 100 million people, in particular.
Sorry, Ms. Muchala, this is unfortunately the technological trigger that brings you to a close. I'm sorry, it's only 3 minutes. I hope we can have your statement also available online. My apologies. Okay. But thank you very much for your insightful and very clear comments and observations. I have to turn to my left now because on my list I don't see any names. Do we have some? Or colleagues, again, this is the moment where member states are welcome to take the floor. And I see Colombia on behalf of like-minded countries, supporters of middle-income countries. Ambassador, you have the floor.
Thank you. Thank you to you, Mr. Steiner, and thank you for the President. I have the honor to speak on behalf of the like-minded group of country supporters of middle-income countries. The group would like to underscore that the 22 FSDR has showcased the critical fiscal constraints faced by developing countries to finance their socioeconomic recovery plans from the COVID-19 pandemic while advancing the implementation of the 2030 Agenda. Increasing fiscal space for developing countries will require a more affordable and effective countercyclical support from the global financial system while recognizing the need to ensure access to concessional, non-concessional, and blended finance for all in order to address the multidimensional challenges of sustainable development that go beyond per capita income. Therefore, it is critical to advance in a realistic assessment of the achievements and challenges faced in the implementation of the current global initiatives to address debt, sustainability, and liquidity needs, namely the DSSI, the Common Framework for Debt Treatment, and the approval of $650 billion on SDRs. Considering expanding the support of the available debt treatment programs beyond these initiatives to highlight indebted developing countries to fairly address their needs in light of their particular circumstances is needed. The international community should be encouraged to recognize the benefits of including safe countries in overcoming the pandemic and its effects on debt sustainability. Additionally, advancing a joint conversation with international financial institutions to consider the temporary adaptation of fiscal risk criteria applied by credit rating agencies to the unprecedented circumstances of the COVID pandemic will be important to address debt burden and avoid jeopardizing the continuity of key investment for sustainable development. Mr. President still faces challenges related with the strained health and education system, high levels of indebtedness, large influx of refugees and displaced persons, dependence on imports of food and essential medicines, inclusion and migrant workers in the COVID responses, efforts, and eligibility for humanitarian assistance, funds, and recovery programs from the COVID pandemic.
Ambassador, can I just interrupt you for a moment? And I would like to ask our technicians to please extend the time because you are speaking on behalf of a group, so your time obviously is not as large as the group, but please continue and complete your statement. I hope you have the microphone here.
Thank you, Mr. Chairman. Additionally, the current food security crisis is exacerbating socioeconomic challenges. Affected developing countries, especially those with limited fiscal space, require swift and adequate support. Therefore, the group would like to restate the need for the international community to adopt a systemic approach that enables developing countries to access additional sources of financial as a result of the recognition of their multidimensional vulnerabilities go beyond the GDP, as it remains very important for middle-income countries. In this sense, the group calls for the urgent application of complementary measures of progress in bilateral and multilateral channels of financial cooperation, including in multilateral development banks, whose lending capacities and capital funding must be enhanced to reach those who have been left behind. Mr. President, these measures are not going to be enough if we do not ensure universal vaccination from the COVID-19. Despite global efforts to achieve vaccine equity without a significant increase in international cooperation, the world will likely not meet the target to vaccinate 70% of the population of every country by mid-2022. The group would like to insist in the paramount need to increase low and middle-income countries' capabilities to local manufacturing and distribution of vaccines. We stress that the only way to ensure equitable access to vaccines, medical resources, therapeutics, and COVID-19 diagnosis is to make the COVID-19 vaccines a global public good and strengthening the transfer of technology, including through further engagement in the COVID-19 technology access pool under the World Health Organization, as well as releasing the intellectual property rights of the vaccines. I thank you.
I thank the distinguished representative of Colombia, speaking on behalf of like-minded countries, supporters of middle-income countries, and I would like to now give the floor to the distinguished representative of the Philippines.
Excellencies, distinguished guests, a pleasant morning. The first 2 years of the pandemic have proven that a robust and shock-ready fiscal position, bolstered by international cooperation, remains and will remain to be the most effective tool in ensuring a sustainable and inclusive recovery. Prior to the pandemic, our government had already been strong in reinforcing its fiscal position. In fact, to sustainably finance and support its key infrastructure projects, we introduced a comprehensive tax reform program that aims to make our tax system fairer, simpler, and more efficient. Further tax reforms centered on broadening the tax base, imposing taxes on sugary drinks and electronic cigarettes, increasing excise taxes on environmentally harmful activities, and increasing the inflow of foreign direct investments through significant corporate relief were adopted. We also improve our tax administration and collection processes by introducing a nationwide fuel marking program, as well as various digitization efforts, which made tax compliance more convenient and accessible to our taxpayers. Indeed, these initiatives provided our government with sufficient tailwind to appropriately respond to the pandemic and keep our economy afloat. Nevertheless, we wish to emphasize the invaluable role that our multilateral and bilateral partners played in supporting the Philippines through the provision of technical assistance and more concessional forms of financing. For one, the robust cooperation among multilateral partner institutions for the creation of the world's first trilateral vaccine financing facility greatly helped our country's efforts in the procurement of safe and effective vaccines. Additional support has been extended for the provision of additional testing kits, PPEs, and related ancillaries. Further, we have seen how the COVAX initiative has successfully allowed the poorest countries to access life-saving vaccines. Moving forward, developing countries should continue finding creative and innovative measures to ensure fiscal sustainability. For the Philippines, tax reform and tax administration serve as instruments of prudent fiscal management and will continue to play key roles in the revitalization of our economy and ensure long-term growth. Boosting domestic capital markets will likewise pave the way for broad-based inclusive financial system. We're also keen in continuing our infrastructure program with emphasis on incorporating green and sustainable designs. Thank you. Ladies and gentlemen.
I thank the distinguished representative of the Philippines and now invite the representative of FAO to take the floor.
Thank you, Chairman. What lessons is taken from the pandemic? False care message is one health approach. There has been underinvestment in prevention through One Health approach that importantly recognize the interconnection between the health of the humans, animals, plants, and the environment. COVID-19 has underlined that we cannot ignore the fact that 60% emerging human disease are of animal origin. The true scale of the return on investment in One Health prevention measures is manifold, be it through curbing the encroachment on unique ecosystems, reducing biodiversity loss, or promoting joined-up surveillance, response, and disease management. Trainings can be saved and investment for good returns. FAO, together with the quadripartite, that means FAO, OIE, UNEP, and WHO, have recently drafted One Health Joint Plan of Action that serves as a blueprint for great investment at all levels. Presented to the G20 Health and Finance Task Force at the third meeting in April, it was met with resounding support. We will collectively continue to call on all countries and all streams of international finance to invest in One Health action. It will take a whole-of-society approach, vitally including the private sector. There is no viable pandemic prevention without One Health approach. I thank you, Chair.
I thank my colleague from the FAO for his remarks, and I will take two more speakers and then turn back to our panelists for some quick one-minute responses. Next on the list is the NGO Committee on Financing for Development. You are up there. Please, you have the floor.
Good morning, Your Excellencies, ladies and gentlemen. My name is Thomas Palithanam. I represent the Solution Missions, a UN-accredited organization, and I'm speaking on behalf of the NGO Committee on Financing for Development. At the outset, we would like to acknowledge the efforts being made by all stakeholders present here to find ways and means to overcome the social and economic crisis triggered by COVID-19 pandemic. This crisis would also derail global efforts to achieve 2030 Agenda for Sustainable Development. The NGO Committee on FFD is encouraged to note how the outcome document of the 2022 ECOSOC Forum on Financing for Development emphasizes the urgent need to support, in particular, those who are vulnerable or in vulnerable situations, to protect human rights for all and to ensure that no country or person is left behind. Calls to deliver on that commitment in Addis Ababa Action Agenda to raise domestic resources, to establish transparent and progressive tax systems, efficient tax collection, to combat illicit financial flows, to strengthen international cooperation for assets recovery and return, and to deliver on debt service suspension initiative give us hope. Policy frameworks debated, agreed upon, and committed to by governments have been through courageous, determined, and prolonged struggles by civil society converted into deliverables through legislated entitlements. Yet, based on the findings from our survey project and the committee members' work among the most marginalized, we find that the commitments made at global level are not translating effectively on the ground. And this is often because the neediest remain unempowered and lack the capacity to demand those entitlements. Rights we know are never given, but taken. And getting those rights is unavoidably a political struggle. So the NGO Committee on FFD makes this urgent plea to governments, the primary duty bearers, to invest on building the capacity of the right holders to claim their rights, to say, we will not be left behind. Thank you.
I thank the representative of the NGO Committee on FFD and turn to Pooja Rangaprasad, Society for International Development.
Thank you so much, Chair. I'm speaking on behalf of the Civil Society Financing for Development Group, including the Women's Working Group on FFD. The specter of volatile capital flows from developing countries in the context of international monetary tightening and the phasing out of quantitative easing policies requires that capital account regulations on both outflows and inflows are a permanent and preemptive policy tool, not only for liquidity and solvency crises, but also for the prevention of debt and currency crises. The developmental role of the state to mediate between the logic of global finance and the economic and social rights of citizens is severely affected on multiple fronts, from the turn to a new age of fiscal austerity as debt defaults proliferate, to the lack of consensus on core financial regulation tools for food and energy futures and derivatives markets, fintech, and digital currencies. The systematic reform of the international financial architecture is precisely why we need a new international conference on financing for development. We urge member states to urgently agree to such a new FFD conference to ensure that we have a new global consensus on the international financial architecture that works for people and the planet. Thank you so much.
Thank you so much. And let me immediately turn back to our panelists. And if I may begin in reverse order with, Mr. Bollier has had to leave, so you can see the crisis is very intense and the IMF is right on it. So we thank him for joining us earlier on. Let me turn back to Deputy Minister Bollier, Sinchai Boravong. 1 minute each, please. Just maybe an aspect that stands out from some of the comments. Thank you.
Thank you, Mr. Moderator. I think it's a great honor again for me to have this 1 minute. I think to overcome these challenges, our international community has to work together on the international tax cooperation to ensure that improve the tax administration in the poor country, and to make sure that on the global cooperation has pay fair tax to the poor country where they do the services. The second is the debt relief. We have to look not only the short-term relief, we have to look for long-term and medium-term relief that will help the poor country. Thank you.
Thank you so much, Excellency, for your comments. Minister Mathilde Arnkrans, may I turn to you for your feedback?
Thank you very much, and thanks for a rich discussion. I agree we need to focus on building taxation and tax systems with the right design and implementation, but also a key dimension is to build back better when it comes to development by creating decent job and paying taxes when it comes to the private sector as well. But I just want us to keep in mind that all the relevant frameworks for an inclusive and sustainable recovery are to a large extent already in place. So we need to maintain focus on fulfillment of the 2030 agenda and the Addis Ababa Action Agenda and the Paris Agreement, because they all have well-defined and developed concepts for implementation, monitoring, accountability and reporting, because it's time to act and time to work together. Thank you.
Thank you very much, Minister Arnkrans. May I now turn to Minister Dr. Lia Tades? You have the floor. Minister Tades, are you still with us? Minister, could you please unmute in case that may be the cause we cannot hear you at the moment?
Sorry, can you hear me now? I was having difficulty.
Yes, now we can hear you. Please go ahead.
Thank you, Chair. It was wonderful to hear all the reflections, and I had some connection problems if there was a specific question addressed to me before I reflect.
Not in particular, but I think the idea was any aspect that you perhaps wish to draw on from the comments that you could follow, but not specifically to you in your capacity as Minister from Ethiopia.
Thank you very much. Thank you, Chair. As was reflected from all, I think the pandemic has really taught us so many things that we need to really leverage on going forward as a global community, particularly as many of our countries are passing, the whole globe is passing in a pandemic, but also many countries are passing with multitude of challenges. So really planning on the way forward in terms of a global community with solidarity is a critical point, and really looking into the fiscal space and as a global community which is really interconnected is what we have seen. Where particularly the learning from the vaccine delivery can be taken for any other challenge that we are having now in terms of the economic crisis. When there were the initial countries were holding many of the supplies, and when many other countries have been suffering from the equity, the access, the spillover effect was, as a global community, was affecting all of us. But it is similar in terms of the economic crisis also that we are passing through, unless we really align our policies and also the solutions that we have for achieving the Sustainable Development Goals, it will be difficult to really go to the next phase. So the key point I also feel from all the reflections is really this working as a global community to achieve the SDGs. Thank you so much.
Thank you so much, Minister, and thank you again for staying with us through this session. I now have the pleasure to turn to Ms. Mariette Jager, European Commission. Mariette, you have the floor. Okay, we may not have her online anymore. Then let me briefly just offer a couple of closing reflections. Vice President, Ministers, Excellencies, ladies and gentlemen, then hand over to you for closure. I think we have heard from this morning's contributions, beginning with the President of the General Assembly, but also the Deputy Secretary General, the panelists here, that we are truly facing a moment in financial history that deserves this term of a perfect storm. And I think we have heard this morning examples of how countries, first of all, have tried to respond and how challenging this environment is. We heard from Lao PDR, we heard also in the room from the Philippines and Ethiopia. And clearly there is an enormous challenge right now, and Deputy Minister, I think none of us envy any finance minister at the moment, because the demands that are being made onto a national finance ministry are simply incompatible with the resource envelope that is available. The contradiction of our time is that we do indeed, as a global financial system, as a global community, have the means to respond to this, but as I think we have heard time and again, our capacity to respond as an international community with the international financial architecture remains a major challenge. We estimated, for example, in UNDP that had low-income countries had the same vaccine rate as high-income countries in September of last year, which was around 54%. Their GDP in 2021, and this is just low-income countries, would have increased by over $16 billion. Just to give you a sense of what it means to sit and actually talk about vaccination rates at this moment in time. Look at the increase in grain prices, the increase in fuel prices, and now the growing interest rates for financing. Every percentage point is not marginal, it is billions of dollars. In fact, hundreds of billions of dollars. If you take the IMF's predicted reduction in growth by 1%, we are talking hundreds of billions of dollars. Our moment in time is to recognize this early enough. This is why this week's Financing for Development discussions, alongside the spring meetings of the World Bank and the IMF, matter. There are windows of opportunity in which you can act by design rather than panic by default. This is one of those moments. I left Washington last week not reassured, I have to say, and I convey this to you not as a criticism, because as we heard from our colleagues in the IMF, but also if you had the World Bank here, if you had other experts speaking, we are struggling in our international financial system to respond adequately, in part because the materiality of the current disruptions are not yet perhaps significant enough to the global financial system, but they are in some instances already absolute to national financial systems. Our responsibility in the United Nations has been to turn the spotlight on countries that are simply, through no fault of their own, in a situation where they are facing essentially a situation of having to go into default. The first ones have begun to do so. There is another group of 60 countries that are at risk of doing so. And it is therefore urgent, and the word urgency is not one that we saw translated into immediate actions also in Washington. The comprehensive framework has not really evolved. The DSSI is not set up. We had some very good news on the reallocation of SDRs, but the new Resilience and Sustainability Trust will not begin to kick in until October of this year. So I think the key message from this morning and throughout this week has to be that the international community, particularly those who have the means in terms of mobilizing finance, to begin to consider the situation truly for what it is, a fiscal emergency that is playing out on essentially different parts of the world in different ways, but already beginning to constrain not only national economies, but affecting hundreds of millions of people. And if you remember, the 2008 financial crisis is a stark reminder of how it only took 72 hours for the increase in grain prices across the world markets to price out of their ability to buy their foodstuffs hundreds of millions of people. Our colleagues in UNCTAD have also reminded us that spikes in food prices have often gone along with also political unrest and turmoil. This is a multidimensional crisis that in many ways cannot be solved only through a financial lens or indeed track of response, but it is inextricably linked to our ability to stabilize a global economy that is under enormous stress and is putting well over 1.7 billion people, that was the estimate of the Secretary General's Global Crisis Response Group, now in immediate harm's way as a result of actions that have nothing to do with their own choices or decisions. I leave you with that thought and thank you very much for this morning's session and hand back to the Vice President. Thank you.
I thank the moderator for skillfully guiding the panel discussion and also setting the seriousness of the global scene of our perfect storm. And I also thank the distinguished guest speakers and participating delegations for their insightful contributions. This afternoon at 3 p.m. the forum will hold a panel discussion on the theme Aligning the Global Debt Architecture with the SDGs, What Will It Take? This will be followed by the introduction of the Financing for Sustainable Development report and the beginning of the general debate. The meeting is adjourned.